Hi, this is Daniel. You're watching Unrivaled Investing. Earlier today, Alibaba announced some major news that has the potential to unlock the stock, maybe 50, maybe even up to 200% upside based on this news. If you enjoy educational investment videos, please make a point of hitting that subscribe button. Let's understand what's going on with Alibaba stock, this latest news. So they talk about Alibaba Group announces new organizational and governance structure. Under this plan, we'll have 6 major business groups and other investments, each to be independently managed by its own chief executive officer and board of directors. Then they talk about the 6 different groups. We'll talk about that in just a second. What is going on? What Alibaba management is saying is that they are taking the hammer and they are smashing the company. What was once the largest e-commerce company in China is now going to get split up into many different pieces, at least 6 different pieces based on what management is saying here. And so what are these different pieces? Why are they doing it? So there's a couple of different theories. One of which is maybe the CCP said, hey, you know what? You've made so many mistakes in the past. You know, you're so big. Let's just split you up. And we don't want to have to deal with this big major institution going forward. Let's break up the pieces. That's one theory. Another theory, and this is what I think is going on, is management saying, look, and I've called this out in several of my Alibaba videos, is that you could ignore most of their business segments because they were unprofitable. And if you just focused on their core e-commerce business, it was trading at a low teens earnings multiple, maybe even high single digits if you factored in their balance sheet. And so what I think management woke up to is like, hey, this business, all these businesses that are unprofitable aren't getting any value recognition. So let's put them as separately publicly traded vehicles, and maybe Wall Street would give it a higher value. And so these different segments, cloud, Taobao, Tmall, this is historically what's generated the vast majority of their profits, their core China e-commerce business, local services, global digital business. This is their international e-commerce for the most part, Lazada, AliExpress, their Turkish business. Then they have their logistics segment and digital media and entertainment. Unclear what they're going to do with their significant investment in Ant Group. And so each of these different segments will have the option to raise outside capital and potentially to seek its own IPO. So you might have, within a year or so, you could have 6 or 7 different holdings that are all publicly traded, potentially, based on this announcement. So this is a big, big, big deal. And I think it actually is a good signal for potentially other Chinese companies, other major Chinese companies, maybe Tencent, where maybe if I'm right about the theory that CCP could be encouraging this, maybe you see a breakup with one of these other major companies. So it's very curious. And I wonder if it actually, jumps over to the US as well, because you sort of see similar dynamics with like Google, where it's like, hey, this other bets and their cloud business isn't really getting much value. Could management consider a similar action? And so we might be in the era where these big companies got so big now where the hammer comes down and they just break off into, separately traded vehicles. So we'll see how that happens. But as you can see, based on their financials, and this is as of the 9 months, December 31st, 2022, China Commerce, once again, the only real significant profitability that is in this business, based on adjusted EBITDA. You look at their cloud business, that's marginally profitable. Everything else is negative. And that's part of the reason why, once again, they're considering this split up, is they're saying Wall Street's not giving us any credit. Investors are not giving us any credit to these separate businesses that, yes, they're loss making now, but will they always be? Now, what are these different pieces worth? First of all, in full disclosure, this is not financial advice. And so as we look at the different pieces, first of all, China Commerce. And I want to do a quick plug where, if you're looking for compelling investment ideas, consider unrivaledinvesting.com. The subscribers are grandfathered into favorable rates. So as I raise prices over time, you're locked in. Just something for you to consider if you're looking to take charge of your investment journey with compelling ideas. Also share my own personal investment journey, what am I buying and selling, stuff like that. So that's at unrivaledinvesting.com. And so looking at the different pieces of Alibaba, what's going on here? So you have China Commerce. And when you're looking at this is the biggest driver. And I show the potential change just from this business alone, this core segment. Now, I'm sure some of the things will get tweaked and some of these figures, might be higher or lower based on how they move some of the pieces around. But broadly speaking, their China Commerce, which is what's going to be staying with the existing Alibaba entity, everything else will sort of get spun off or split off or IPO'd. This alone has the potential to be worth 10% more or up to 100% more than the market is currently pricing, just this segment. Now, keep in mind, I'm pricing in margins that are a bit lower. where they currently are. So I'm trying to have some conservative assumptions. Currently, it's mid to low 30s. I'm saying, mid 20s to 30% as my range of margins. I'm assuming a 25% tax rate, and I'm assuming they get back on track, that they get back to growth. That assumption, look, this is why it's a hypothetical framework. If they don't deliver, and this goes for all of Alibaba on these different segments, if they don't deliver on growth, if they don't deliver on profitability, then the multiple assumptions can be way off. So you can get stock prices that can go way higher, way lower than what I'm penciling out. So that's a really important data point. But just looking at this, if they're able to get back to a growth story and their margins don't decline too much from here, and you get around an 18 times multiple, you have 100% upside just from this one segment, which is primarily Taobao and Tmall. Okay, then you have cloud computing. Once again, it's not at the margins that they could be in theory, but I'm assuming in theory that they get to 15 to 20% over time. You look at something like what Amazon has done with AWS, that's closer to 30% margins. Maybe this is more competitive, so I'm assuming about half the rate. Then I assume that they get back to a reasonable growth rate in the years ahead. Things have slowed down a bit this year. So assuming that things are a bit faster in the years to come, 5 to 15% growth. Once again, this segment alone is the equivalent of, let's say, 10% to 30% of the existing market cap. So that goes on top of what you have with their commerce business. So previously I said 9%, and that's 9% on top of the market cap. This is as a percentage of the market cap. So you could say this cloud business, if it were IPO'd, it could be worth 10 to 30% of the existing share price. So then when you start putting all these pieces together, and I'm going to share my full model for my subscribers at unrivaledinvesting.com. Just hit me up in our exclusive Discord server for annual subscribers. And so if you look at these different pieces, and there's a lot of assumptions that go into it, and I'm sure some of them are going to be high or low. I mean, clearly China commerce, their core commerce business, that's the one that's worth the most. The next one is cloud computing. I suspect that's the one that's worth second. And then third is their international commerce. Those are sort of the top three. And then you sort of have everything else, which it's unclear how big or how small these things are. But looking at this, putting all these different pieces together with what I think are fairly reasonable assumptions. Now, you're going to have to make your own assumptions when you're doing this, but I provide my framework so that way folks can start putting these pieces together, in terms of margins. Looking at this, that's how I'm getting the 50 to nearly 200% upside in what could be a short time period. It depends on how the market, assigns value to these different things and, how it goes public. And the stock, keep in mind, has rallied a bit to $97 a share. So I look at this and I think it's quite interesting and this is a big if you're willing to tolerate the China macro concerns, the China macro, throw up a little bit aspect where you're just like, I don't know about the CCP. I don't know, what's going to happen here. And part of the reason why, and this is another aspect is, and this is part of the thing that's been a huge turnoff for me personally as an investor, previously as an investor with Chinese stocks, is that the free cash flow just wasn't getting distributed to shareholders. And I saw, look how low this goes. And how come they're not buying back 10, 20% of the company? They have the balance sheet to do it. How come they're not doing it? And that made me concerned that maybe the CCP wasn't letting them. And if ultimately you have a company that can't actually return its free cash flow to shareholders, well, what is that worth? And that's still the fundamental problem, even if you take a hammer to it and split it up into 6 different pieces. So that's the part that, that makes me gag a little, when I think about this, like, ugh, so once again, if you can stomach the China macro of having a CCP say, hey, you can't necessarily return, they supposedly, like when you look at their balance sheet, Alibaba says, look, we've got like 380 billion in cash. Well, how come they didn't return that to shareholders when the stock was even lower than it currently is? How come they didn't go do an absolutely bananas buyback? And that is part of the concern. Now, I think this is management's way of doing possibly the next best thing, which is they're saying like, okay, we can't actually act like a normal company and return cash flow to shareholders because optically the CCP doesn't want to think about cash from our pride and joy businesses going to, let's say, international shareholders. So instead, the next best thing is to let's split it up, and then maybe these individual pieces will get the recognition. Once again, you still have that sort of macro overhang. But I look at this and I think, this might be management trying to make the most of what is a tricky situation for them, to try to say, hey, these different pieces clearly aren't worth zero. Even if they might be unprofitable now, they're probably profitable in the future. Logistics, media businesses, local services, so that's really the question mark of what is the value that they get going forward, given this China macro overhang that is very real. That is something that every investor individually needs to decide what's right for their own investment journey. So if this video has been helpful for you, please make a point of hitting that thumbs up, hit that subscribe button, and thank you so much for watching Unrivaled Investing.